Good evening, TheoTrade. This is Corey Rosenblum, and you're watching the Theo Night video for July 26, 2018. And we're all about earnings tonight. Earnings and expected moves. We're getting the first signs of volatility after some earnings plays and some big names, including what we're seeing now in Amazon, but also Intel and other names. What I want to do now is take a look at the close and the immediate action today, just after the market closed Thursday. And we'll see these things play in the next hour or so, and of course pre-market on Friday. So be sure to watch these as they go forward. But as of this video, I want to take a look at the outcome and expected moves and how that played into what we're seeing. So now we're seeing Amazon. It reported better than expected earnings, but look at the range. What I'm showing you here is a daily chart, not updated, and the hourly and intraday charts. Just on Amazon, zooming in, we had, within the first moment, a drop from 1800 to 1700, and then just as quickly as that started and finished, a move straight toward 1900. So that is 100 points up, 100 points down. And we faded that and are pushing up. One way to look at these things is through our expected moves of the near-term options in terms of volatility. So this near-term option play had a $98 up or down expected move with 1 day to go, Friday to go in the trading session. And is that what occurred? Yes, literally $100 up, $100 down within 5 minutes of reporting. So that's what we're looking for. As Don always tells us, markets are so efficient. Option volatilities are so efficient that it nailed that just about to the penny. And this is a stock that's $1,800. Quite impressive. This does guide our trading decisions. Of course, we'll see how this closes or how this continues to trade after hours and pre-market on Friday. So any positions you have on, continue to watch these levels. But if you're new to this concept of volatility and how to look at expected movement in the options chains, this today is going to be a great example of that concept. And like Amazon, Intel reported earnings after the close. We have a movement from the 52 level. Again, what we're looking for is this expected play up or down. What was the option volatility? $2.36. What's happened so far? Now, I took this closing price and drew $2.30 roughly down and up. So just like Amazon, we had a gap immediately and movement following the earnings announcement straight into our 49.50, just about that full movement, and not seeing any movement at the upside. So we'll be watching Intel on its trading range at the midpoint of its daily chart, 52 per share. Looks like we'll start about $50.50. That's about here, but pushing up away from this immediate earnings announcement. That is, again, within its expected movement. Chipotle, expected movement volatility was about $32, almost $33 per share with 134% implied volatility. What actually happened? This movement from roughly 450 straight up to the 480 level, breaking through a flag trend line and keeping this uptrend going for this restaurant stock. And so we'll begin Friday session near this 475, which happens to be, if we pull back further, a new swing high just shy of this 500 pivot in 2018 and 2017. Not quite back to 750, but still that's where we'll begin, just shy of this prior high. Nonetheless, the expected move, $32, all the way up there. Next up is Starbucks. Now this is looking like Amazon. What was the movement on it? On Starbucks was about $2.20. What happened from the earnings announcement, jumping in here? From this close, roughly $51, you did see a jump up, down, but it, like Amazon, is pushing back in the midpoint. Now we're seeing this breakdown and this push back toward our 52.50, 52.60 level. And that is going to define our short-term trading range for Starbucks. Next is MasterCard. This is a weekly chart from 90 per share, 2015 to 17, straight up in a parabolic arc for MasterCard shares. And it is at this 210, just above 200 per share level. On the daily chart, we see a better perspective of our uptrend. So it as well is making higher highs, higher lows, and had a down movement. What was the expected play on MasterCard? $2 and just about 50 cents. That is the play. First Solar will begin gapping down from support, breaking beneath this 52.50 spot, and the 50 level is where the market trades at the moment. What was the expected play on it? $4.90, just about $5. And you're seeing that roughly play out from 53.50 down to 48.50, and a little bounce off of the edge of that expected play. So watch this name as it trades into Friday from this spot pivot marker at the 50 per share level. That's where the market is tagging at the moment. Expedia, travel company, is going to have a gap up. This was going to gap from the 127.50 level, 128 level, all the way just shy of 140, peaking out just after the market closed at 144 per share. What was its play? Just above $11. What was the outcome? 128, all the way up to 11, 139, right at the edge of the expected move. Valuable information for trading swing setups or option plays into earnings. Next up is Electronic Arts, EA. Now EA's missed. EA's share prices are falling from the 144 per share level, breaking through support on this overextended uptrend. It'll start the session tomorrow near 133. That's down here. That's roughly on the pivot point from earlier in 2018, just a little bit above that spot. So EA is expected to gap down. What did the option volatility say about this particular candidate? It had also 100% implied volatility for this next term option, and that was over $8 per share. What did it move? Just about $8 to $9 move. Almost got it. And even though these candidates on a Thursday met or exceeded their expected move from their volatility chains and option volatility chains, we can't go on without saying one little candidate recently blew through the expected move and surprised a lot of traders, and that's Facebook. Facebook had about a $15 expected move. What happened on the gap earnings? That would have put it down to about 205 per share, roughly 200, 205. Well, the thing gapped down to 165 and then tried to recover off of it today, but stayed on the mat, closing today's session roughly at 175, tripling the expected move. So what's very valuable as a guide for what we can expect in terms of straddles, strangles, calls and puts, verticals, butterflies. Those are effective plays into earnings positions with risk control. Just remember, it's not always going to work perfectly. It works more times than not in guiding our decisions and guiding volatility, but sometimes surprise outcomes trick and trap the majority, and that leads to bigger moves. In this case, a 3 to 4 times the expected play for Facebook. The remainder of these names stayed within their parameters, at least so far. Will they hold them Friday? That's where we'll pick it up. Take care, TheoTrade. Be safe. We'll see you tomorrow.